Great to have you back on Yukina. Thank you for joining us. What we've seen of late is just incredible. Fear, excess fear, and a great recovery. Once again, I guess the tourism has played out, which is buy when everybody is scared and sell when everybody is greedy.
But nobody buys when, so nobody bought at that level, and that's why we say that it is very difficult to time the market. Remain invested, but you take the pain. See, when it goes down, I also don't like it. But there is no alternative to making money. So when market came back by 10-12% in March, I never had any job to do because my chips were already put on the table. And right now, as we are talking, market is going up or down. So you cannot time the market. It looks that we can time the market, but when the levels broke 7,000, I know my biggest of the clients, they wanted to. Some foreign economist or somebody said the world is coming to an end. Market is headed for 6,000, and they believed in that. They took the money away.
They actually sold when they should be buying.
Sold. The big guys, they sold actually. So, and at that point of time, for me to say anybody that please, in fact, what they said, first give us the money, then we'll talk. So, with that kind of conviction at the bottom of the market, looking back, you can say that it has come back. But if it by chance not come back, so it becomes, that timing of the market, these bottoms and tops are full for the fools and liars.
So, I'm completely with you when you say that it's impossible to decide the market and really catch the absolute top and the bottom. What we can perhaps analyze are earnings and the economy.
Obviously.
Now, the economy or the Indian economy is in a bull run. We're the fastest growing economy in the world. But when it comes to earnings, I still feel that we are in a recession.
Why?
There is just no recovery. It's been, the recovery is not coming.
Why you have to be bothered about all 3,000 companies' earnings? You should be bothered about what is happening in your 20 companies. See, if I have my company, I have sympathy for all the companies which are not making money.
Of course.
But if I am making money, I should be pretty happy. So for managing portfolio, and that's the active manager's job. We are not passive managers, we are active managers. So we need to find out of those 3,000 companies, where is those 20, 25, 30 companies which are going to do well. And I'm quite sure there are at least 200, 300 companies which are, which are doing very well. They are bull run means super bull runs. So you have to become lucky, and you have to be very, precise in selection of stocks. And because of portfolio approach, even out of say 3 stocks, 1 stock is wrong, 2 stocks are right, you still do well.
You've always liked companies which are low on debt, which have great return ratios, which have a good franchise.
Yeah.
But are these companies now priced to perfection by and large, with the exception of 1 or 2? You can talk about an iShare, we can talk about an Indigo, but by and large, quality stocks, are they expensive?
Yeah, some stocks, you see, the first thing is whether you understand the company. Business and the company. If you don't understand, see, something which might look to you expensive might look cheap to me. And something which looks cheap to me might look very expensive to you. You might be scared. Like in case of Indigo, at 700 also I get so many scathing remarks, but I sincerely believe at 700 was a terrific value, and that's how we are holding. So I think it is very difficult to reconcile the understanding of value about a company, because it's all about the future. So how you think about future of a company, and how somebody else thinks about future of a company. That's the difference,
What is your understanding of the future of the pharma sector?
See, in Indian pharma, it's a divided house, in the sense that there are two segments. One is what is catering to the domestic branded generics, and second is what you are exporting. The bigger story is what you are exporting. Domestic, because of the price control, the opportunity. It's very profitable at those prices also, but the companies are not able to make a lot of money. Authorities are coming and cutting the prices of popular drugs. So that is cutting the profitability of the domestic side. But global side, it is a value migration story. One of the biggest value migration, and it is something which will happen. Like every single generic drugs will come from India, and generics are in too much of demand. Whether it is Japan, whether it is America, Europe, all these countries, they need very small quantities of high quality drugs, and that can be produced at a very economical price in India. I know there are companies which are making a drug in the name of $500, $1,000 and exporting there and getting prescribed and selling it at profit. So I think this kind of capability of customizing at a very small lot size is only possible in India.
But the peak return ratios, for example, there was a period of peak growth in IT. IT companies were growing at 100%, 70%. That's come down to late single digit now. Early teens for good companies. Sun Pharma, or for that matter, Cipla, they've got return ratios which are north of 30, even 40%. Will that peak come down now?
It depends on all the companies, how competent is the company and what are their strategies. How lucky they are at times, when you acquire a company and suddenly it turns out to be a gold mine. So, all those things matter. Like, say, Sun has taken over Indexy. Now, how big is going to be the turnaround there? If it is just an ordinary turnaround, then it is one thing. But if it is by chance a full blast turnaround and 2 plus 2 is like 20, then it can be a very big story. So, I think one has to be, it has to be very company specific comment. What I'm saying is the underlying tailwind is massive. Domestic generics demand is very good, global demand is very good, you have a cost advantage and you have very deep research kind of culture. So today you are not doing any new discovery, at least they have not demonstrated in a meaningful way. I think as the balance sheet size becomes bigger and risk bearing capacity increases, I am quite sure a few of the Indian companies will make foray into new chemical entity discovery because they will have dollars to kind of spend.
IT sector is growing. I met Chandra 2 days ago and Chandra is of the view that everything will become digital. Digital is a $2.5 billion business for him and he still feels that it will grow at 50%. A $2.5 billion business can grow at 50% for a couple of years according to him. So how are you laying your bets in the IT space? Because the aggregate growth is down. Digital is growing. It's very difficult to differentiate, but I'm sure you are an alpha seeker. You have something special which tells you that how to approach this smack space.
So I think between IT and pharma we are about 30%. Almost one third of the portfolio is these two. So that is a little more, not so much to do with the domestic economy, much more external looking. Currency benefits them. So and these are the best two stories from India for the on export side. So we'll always have good chunk of 1/3, 25, 30%. But it all depends on the companies we get. Say initially I used to have 10% in Infosys. So initially it worked very well, but last 3-4 years before Sika came, it was a big pain.
So in a declared portfolio, which is the IT stock you own?
We have Infosys and TCS.
Okay, the large ones.
Large ones, these two.
You're not ready to come down the ladder right now?
At least I am not comfortable. I love, because see this opportunity is extremely large, but only for very few. Because the larger companies, larger global corporations, they want multi-location execution and they want safety of variety and quick response and deep response, backup. So I think at least the big companies are showing reasonable goals. So like if Infosys target of 20 by 20, nobody, market doesn't believe that.
30% margins, 20 billion turnover.
So nobody believes, because current valuation of 20p doesn't say. I think they have very small respect for that particular target. But I have a great respect in that target. So because of that, that is almost my number one position, 9%.
At least the management has the vision to see, which is what I like about Infosys, so and capability to deliver.
And they are reiterating every quarter that we want to achieve. So the message is going down very strong. And I'm quite sure in their corporate planning, they must have planned $20 billion.
Okay. So, before we wrap, just two more questions. Can I safely say that for oil marketing stocks, the genuine achhe din phrase can be used? Because now they're expanding capacity, GRMs have stabilized, stocks have corrected, the size of opportunity is great and there is no competition. Typically the kind of businesses you like.
As you said, this QGLP, they have quality of business, monopolistic business, huge business. This is the largest business of India, 10-12 lakh crores, growing at 10-12% in volumes. Prices on top of it, if oil goes to 60, then it will further grow. So they have the quality, they have reasonably good management, professional management, of course PSU right now, but no competition. Growth is the same. Online cannot disrupt it. You can't fill petrol online. Okay, Chinese cannot come in petrol. So these are two big threats which we have to take care of always. So there is a longevity in the story, and it is about 7-8p multiple.
So stick to that QGLP. Q stands for quality.
So that's how I am telling you. It's a perfect QGLP stock. What can disrupt? I don't know. Right now I think at mid-single digit P multiple, this seems to be a perfect bet.
Okay, a 30-second answer. You'll hate this one, but I have to ask you a market question. Can I safely assume that the worst is behind us? I mean, we've seen a lot of pain in Feb, but in generally, what's your gut call? I mean, worst of the price action is behind us.
I'm actually encouraged by the monsoon forecast and actual decline in the CPI. Finally, CPI is collapsing. Structured. So that will allow us to, and in fact, I was even more encouraged, I think last week when Governor said, we are at the cusp of economic revolution. Because the world is, see, this Ando mein Kana Raja, that quote, the world is in such a dire straits. Zero interest rate, negative interest rate. Here we are talking about 7% growth.
It may look less, but it's an enviable growth if you look at what's happening in the world.
So I think the world will pour money. Now, what happens is sometimes there's FIs in last 6 months, sometimes they came, they went. But I think at the end of it, if you take 3 or 4 year cycle, I think a lot of money is going.
Money has to change yields, and yields will only happen if you buy good businesses at good valuations. Really appreciate your time. Thank you for joining us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.